Welcome to Wall Street to Bay Street and market update this July 28th, 2010. We haven't had an update for a week and a half or so, and I want to just give you an update on our portfolio, where I expect the market to go. Obviously, over the last week or so, we've had an incredible bounce off the bottom. I think almost a 5% move over 3 days. Which is obviously hurting some of our short positions. But I figured we'd go through and take a look at each of our positions and see where we are from here. Our longest position that we've had right now has been a short on the SSO. If we look at the weekly chart here, we can see that over this time frame we still have a downward sloping chart. A couple 4 or 5 weeks ago we were oversold. These lines here represent two standard deviations from the average price over the weekly chart. And now we've sort of gone back to the median point. If we look at this on a daily basis, you can see that over the last month or so we've been bouncing up and down, significant moves down and up. And remember what I said about the SSO and these double and triple levered ETFs is they degrade over time. So being short them, even with all this volatility, will eventually degrade the price. Now we've taken off a significant portion of this, and we're holding for a significant move down later on this year, which I still expect. Now, if it climbs up to new highs and the stock market climbs up to new highs for the year, then I'll probably be likely close out the position, stop myself out, and look for other entries on the long side. The next stock that we're very short of is the euro, and obviously you can see over the last 3 weeks or so we've been in a world of pain as the euro has rallied from its low. Weekly, it's a more mixed picture as we're still in the downward channel, looking back from where we were at the beginning of the year till now. Now, what I see here is, once again, our stops are in the low 130s for this, and we're approaching them, and we put on a big position in the 127, 128 area right here, nibbled up on the way up. If we put on a Fibonacci retracement mark here, let's do this quickly from this high to this low, you can see that we're sort of in the ambush zone, or the Fibonacci retracement zone, between 50% and 62%, 61.8%. So we're in that zone. If we sort of crack up here, then we'll know that the euro maybe has longer ways to go and might retrace 50% of the full move, and we'll have to look at stopping ourselves out and potentially gaining a re-entry. Now, I think the euro is fundamentally flawed, and over time will continue to drop down. We just had the stress test come out last Friday for the banks, and in my opinion, they're nothing short of farcical, as they did take a haircut on various government securities, i.e. like Greek government debt that they had, but only if the individual bank decided that it was sitting in the trading book and not the position book. So any of these banks could have shifted any of their positions in government debt to a portfolio book and not taken any mark-to-market hit for the stress test. So obviously, as you can see by a lot of the market commentary, that this is not a very stressful stress test. Our other position here, which we have a very small position in, is gold. And you can see that gold is, over the last week or two, actually over the last 4 weeks, has been weakening. And you can see if we get down to this 2 standard deviation line, and in sort of this area right here where there's a bunch of resistance, we will look to add on a significant position into the gold area. So sort of in 110 on the GLD, or if we look at the gold contract directly, sort of in the 120-ish range, somewhere in the 120-ish range, we have a lot of support potentially from past price history. Now, I've been waiting for a while to get a big position in gold because we've had a nice run up here, and we always have pullbacks in this position. So what we'll do is we'll watch the gold market more closely, and once we get to that sort of level of the 1120 on the GC or 110 on the GLD, we'll look for various entry tools to try to enter a position with a relatively tight stop. Another smallish position we have, option position, is in the FAS, which is the triple short financial. Now, we had a significant drop down, and we only traded here. So let's put daily chart. Pull up the daily chart here, and you can see this has bounced back between the standard deviation, so it swings pretty high. This stock moves a fair bit. So right now we're a little bit overbought, over one standard deviation away. Just take the middle of these two lines, you get one standard deviation. So we're long puts, which means we're short the stock, and we will look to, if we get a move sort of down here in the 20-ish range, we'll look to take some profits and take off our position. These are August puts, so they have like less than a month remaining on the entry. Now, just to give you some guidance, what we're looking at right now over the next several weeks, and as the market continues to go higher, we do have some stock picks on the long side to counteract some of the short side that we're looking at. We posted a discussion on Monsanto on the chart, and we're waiting for a pullback in Monsanto because we'd like to have the low here, the 52-week low, and it's actually a multi-year low, I believe, as a stop for our position. So if we can get a pullback here, we'll take our position. What we might do is, if we get a slight pullback down at the 55 area, we'll put on a pilot position and wait for a bigger pullback in the 50, 51, 52 range to get a full position, because I think we'd like to have our stop at around 45. So a pullback will allow us to take a larger position. A couple other stocks we're looking at taking long positions are Microsoft. I think this is a very good value stock. Lots of cash on the balance sheet, generating tremendous earnings with the new Windows 7, and undervalued in my estimation. So what we would suggest doing is potentially writing puts against this stock. So you're generating income. You write 25 puts, 24 puts, or even 23 puts each month, and generating income. And if the stock drops and it gets put to you, then you enter your position. Obviously, we can't do that with the Investopedia portfolio, but we'd like to be able to do that. And we will wait for an entry here potentially once these MACD crosses to the upside to enter our position here. Now, another stock we're watching closely is Freeport-McMoRan, and copper has had a resurgence over the last little while. So strength in copper will indicate potentially strength in the global economy. Now, let's not get faked out by this, but we got to keep watching sort of Freeport-McMoRan and copper, and this should be a guide for the overall global economy. Now, Freeport has been overextended here, so if we get a pullback into the high 60s, we maybe look to put on a pilot position and a full position in 60 unless the market starts to tank. And another area we like to look at is China. There's been lots of reports out of China about potentially property values, but if you look through a lot of the stock charts of Chinese companies, it looks like the market may have bottomed and is approaching a turn. FXI represents a lot of the larger companies, so we may not be representative of some of the smaller companies. But if you look at the FXI here, you can see that it's trying to break its way out of the doldrums. And if China can break its way through to new highs and sort of pull itself out of the bear market that it's in, then good chance that the U.S. and Europe will continue to show stronger results. A lot of big ifs here. The GDP numbers coming out later this week. Next week is the big payrolls number. Next, the 4th or the 5th on Friday. We're looking at payrolls coming out 6th. So that should give us a good indication of how the economics are handling here in the U.S. There's been a lot of weak economic numbers here, contrasted by the strong earnings numbers from many companies. So it's a micro versus macro trend here, and we just got to keep looking. So we'll continue to look for some long positions, some long entries. As we said previously, with some of the positions that we have, like the SSO, the FXE, and gold, you can buy right. If you're long gold, you can sell upside calls to generate some income, and vice versa. If you're on the short side of SSO and FXE, write some puts out of the money to generate some income as it goes going. And if we get stopped out, then you just close out your put position for a profit, which would mitigate some of the losses taken on the on the stop out. Hopefully this helps. We'll look for some new entries over the next couple of weeks, and we wish you good trading. Best of luck from Wall Street to Bay Street.